So the Feds are to raise interest rates next week, and this is something that you should know. So how does this affect long-term investors, people like you and I, right? Especially if we're invested in stocks like tech stocks like Amazon, Facebook, Apple. It's a known fact that any time that they raise interest rates, one of the sectors that gets negatively influenced the most is tech. So that's exactly what we're going to talk about in today's video. Again, I hope that you guys have been enjoying these double upload days. If you guys want me to continue this, especially as we provide market updates, not just on what's happening over in Russia, but of course with the overall market, please destroy that like button. And of course, consider subscribing if you feel like we earned it. Let's go ahead and just jump right into my screen. One of the things that I shared in today's earlier video is I was day trading TQQQ. I made a couple mistakes, but it was down like 6% when I was uploading my earlier video. I ended up not only making back what I lost, but I ended $900 in the green. So $900 profit is what I'm left with the day after yesterday making $4,500 profit. The beauty behind day trading. Now, one of the first things that I want to share with you guys is, especially for all of my long-term investors, right? You're like, okay, well, how does this even help me in any way, right? The first thing that you should know is as they raise interest rates, it's set to take place next week. The question that a lot of people have is this already factored into the market? Yes. But so was the CPI data, right? Today, CPI data was released, and as you guys saw, the market fell. Do you guys know what the expectation was for the CPI data? It was 7.9%. Do you know what they reported? 7.9%. So although we met expectation and we didn't exceed expectation, the market still dropped quite a bit. And the same thing can happen that next week when Feds do raise interest rates 0.25%. That's not good for tech stocks. They always sell off when interest rates rise. And a quick little update for those that don't understand why the Feds are raising rates. It's to help kind of like manipulate inflation. So when inflation is very, very high, as right now we're at a 40-year high, right? It's in my lifetime, inflation has never been so high, supposedly. With that being said, how do you moderate inflation? Well, what the Fed does is inflation means that it's not that there's not enough money out there. It almost means quite the opposite. So with that being said, because so much money is openly being spent, the way that the Feds can moderate this is by raising interest rates, making it more expensive to borrow money. Hopefully it encourages people to spend less and maybe save more. In this way, they can reverse inflation and actually bring inflation levels much lower. So again, it's not that someone said in the comment section that inflation is because there's not enough money out there. No, if anything, it's quite the opposite. More people are spending money now than ever before. And we need to make sure that we moderate that. Well, I guess not we, but the Feds, right? So that's the whole idea of why they're raising interest rates. And this is one of the raises that they're going to be doing, one of many later throughout the year. So understand that this is not the first time that the Feds plan to raise interest rates. So what can people like you and I do, right? I have my long-term investments. Am I going to sell all of my long-term investments? Is that what makes the most sense? No. Well, just because they might drop a little bit doesn't mean that you need to freak out, right? This is the time to prepare. And this is why I'm making this video. So I really hope that you guys understand that. Just like I made the video yesterday talking about, hey, the NASDAQ market is looking a little bit on the overbought side. We might drop tomorrow. We dropped today, right? It's now being able to make a decision and prepare for tomorrow's potential downfall. And that's what we're here to talk about. So one of the first things that I want to talk about when it comes down to your long-term investments and your long-term plays is that if your intention is to invest in whatever stocks you're currently invested in right now for the long term, then you shouldn't really care what happens on the day today. Yes, it does suck, especially if you update your portfolio every single day, but don't do that to yourself, right? Especially if you know that you bought at these discounted prices. There is no question that Facebook, Amazon, Apple, they're all very, very undervalued or oversold right now. There's no question that we do see long-term gain potential on all of those stocks, right? Especially if they're blue chip stocks. If they're quality companies and you bought at these cheap levels, trust me, it makes sense on why you're invested in them. So remember that, right? There's a reason on why you decided to invest in them. I'm not talking about those penny stocks, right? With that being said, it doesn't mean that they're going to recover right away. So you need to understand the big picture that yes, things might get worse before they get better, but this is why we always talk about position size. There's nothing wrong with being invested right now, but you want to make sure that you don't have so much money invested that when things and if things begin to get worse, that you can't tolerate it, you cut losses, and then if the market recovers, you completely miss out on it, right? Put yourself in a position to succeed. So if you want to invest long term, freely do it. There's no question that money can be made. The question is, can you tolerate the time that it will take for the market to recover? How is it that I plan to make money when the market and if the market begins to sell off with these interest rate hikes? Inverse ETFs. This is not a suggestion. You don't need to do this, but just like you saw today, TQQQ on the day is down 3.22% on the day. Yet, I walked away with $915 profit. I was able to make money even when the actual stock or ETF is in the red, right? And I can show you guys when I ended up selling. I don't sell and I don't buy at the perfect levels. I'm not a perfect trader. My job is not to be perfect. My job is to manage and mitigate risk, not to avoid it. And that's what we're here to talk about, right? So I ended up selling at 45.37. The overall highs were 45.62. I locked in most of my profit, right? So I locked in most of my position. I sold 810 shares. I left myself with 500 shares. I'm okay, right? Just like we said that it's all about position size. I'm okay with holding 500 shares overnight. It's the decision I made. But what if the market sells off tomorrow? But what if the market sells off next week? What am I going to do then? Well, there is an ETF, as many of you guys know, especially if you're part of a Learn, Plan, Profit, and if you guys watch me trade live every morning, it's SQQQ. So this does the exact opposite of whatever the NASDAQ market does. So if you see that the NASDAQ market is consistently selling off, this thing goes up. It does 3 times of whatever the NASDAQ market does. So let me make this super simple. If the NASDAQ market drops 1%, SQQQ rises 3%. It's up 3% today. And if we look up the NASDAQ market, which is IXIC, we can see that it's down 1%. So again, as the market's been selling off, SQQQ has been a great way to be able to hedge our long-term investments by being able to take small day trades to make a couple quick bucks, right? Is SQQQ an investment? Is it something that I want to hold overnight? Not for me, and I would not encourage it for beginners. This is simply a way that you can enter and exit and make a couple quick bucks on a risky trade. This is triple leverage, which is one of the main reasons that I don't like talking about it with complete beginners. If you suck at managing risk or you suck at locking in profits, I'm not sugarcoating it, do not touch this ETF. That simple. I'm trying to look out for you. I'm not here to tell you when to buy. I'm not here to tell you when to sell. I will never do that. But I need to look out for you. If you suck at locking in profits or you suck at managing risk, do not touch this. Do yourself a favor and forget about it, right? I need to be super strict on that. The other ETFs that go up when the market drops, let's say that you're not into tech, but let's say that you're into the S&P 500 or the Dow Jones, right? We talked about this as well. SPXS is the inverse triple leverage ETF for the S&P 500. And then there's the SDOW. Let's say you're a little bit more into the Dow Industrial. This is a triple leverage ETF that does the opposite of the Dow Jones. So now you have 3 avenues in which that if the market begins to sell off when they announce this Fed raise interest rate hike, right, of 0.25% next week, and if the market begins to sell off, now is the time to prepare your long-term positions where you can manage your position size, you can lock in profits, whatever it is that you want to do. But now you know how you can make money as the market pulls back. That simple, right? This is exactly what we talk about during our live trading sessions. All I ever focus on is direction. If I see a consistent bullish pattern or a consistent bearish pattern, that's all I need to be able to make money in this market. Consistency and true direction. And of course, something to make it easier is position size. This is something that we talk about every single day within our live trading session, and I would love to invite you. Whenever you feel like you are ready, click the first link in the description. It will send you on over to my free trading group chat and direct message me. Ask me for the link for tomorrow's live trading session. Don't comment down below. Don't message me on Instagram. The first link in the description, join my free Discord and direct message me. You can tell me a little bit more about yourself. I would love to get to know you and your goals. But again, I would love for you to have an understanding of what it's like to watch someone trade live. Not just make money during a bull market. That's not special. But to know how to make money during a bear market. It's not that it's super complicated. It's simple. But it's the simple things in life that people tend to overcomplicate. And trust me, it's still very challenging. So if you're trying to look for an easy way out, this is definitely not it. Still takes time, still takes practice, and I'm here to assist you along the way. That's the biggest thing. I work with them every single day. So if you're ready to learn a little bit more about our Learn Plan Profit Group and to see if it's a good fit for you, click the second link down below and I can see you as soon as tomorrow for our live trading session. I really do appreciate you guys' time. Friendly reminder, we are giving away a brand new iPhone 13 Pro. Last month, we gave away a custom Digital Storm PC plus $1,000 in this 2-week period. So just in 2 weeks, right? The 18th of March, literally right around the corner, 1 week left. We're giving away an iPhone 13 Pro. You can use it for whatever it is that you want. You can sell it if you want to. For every $1 you spend on our site, it equals 5 automatic entries. Our last giveaway winner, he bought a journal and he bought a, I think it was a hat. It was a $40 order and he walked away with $3,000 worth of goods. So again, if you want to enter, head on over to shoptechbuds.com or click the fourth link down below in order to win the iPhone 13 Pro. I really do appreciate you guys' time. I hope that you guys learned something new. If you guys do or did, please consider dropping a thumbs up. And like always, let's make sure that we end the year on a green note. Take it easy, team.